Welcome to The Explainer. Today, we're diving deep into something that, let's be honest, can feel a little complicated: life insurance. We're going to demystify it, break it all down so you can see how it's really a tool for your financial security. And this is all based on some fantastic insights from Deep Lyax Services. So let's just jump right in with a big question. So let me ask you, straight up, what's your financial shield? You know, when life does what it does and throws those curveballs we all get, an unexpected expense, an accident, an illness, what's standing between that chaos and your family's well-being? Well, the source material uses this really powerful term for this concept, Suraksha Kavach. It literally translates to a security shield, and isn't that just the perfect way to think about it? It's this protective layer, this buffer, that gives you some peace of mind against all those what-ifs. And that is exactly what insurance is designed to be. All right, Section 1, your financial safety net. Let's build on that idea and really dig into how insurance becomes the very foundation of that net. So, why is this stuff so important? Well, it's not just one thing. It's protection, right, from those huge unexpected bills that can just knock you off your feet. It's peace of mind. And in some cases, like with your car, you literally have to have it. But when we're talking about life insurance, we're talking about its absolute core purpose: creating a financial backstop, a cushion, for your loved ones if you're not there to provide for them anymore. Okay, let's move into Section 2, the core benefits of LIC. We're going to get more specific now. Using LIC as our example from the source, let's explore the actual, concrete advantages you get from having a policy. Now, this is where it gets really powerful, because a single policy can do so many things. Of course, you have the main event, the death benefit. That's the core promise to your family. But look at all the other stuff, the benefits you can use while you're living. We're talking tax advantages, the potential for solid returns, and even a loan facility for emergencies. And hey, if you outlive the term, you get a lump sum. Now that brings us to that last point, the rider benefit. Let's break that down. So what in the world is a rider? Honestly, the easiest way to think about it is like optional extras on a car. Your basic policy is the car, and riders are the add-ons you can choose to bolt on. For a little extra in your premium, you can add extra layers of protection, like coverage for accidental death or a critical illness. It's how you customize your financial shield to be a perfect fit for you. All right, moving on to Section 3, a tour of policy types. Now that we understand the benefits, let's look at the different kinds of policies out there. And I get it, the number of options can feel a bit overwhelming. So we're going to make this super simple by grouping them into a few key categories. First up, we've got Category 1, savings and endowment plans. The big idea here is that they're generally non-linked. Now, what does that mean? It just means their performance isn't tied to the wild ups and downs of the stock market. Think of them as a combination of protection plus a disciplined way to save. And the source gives us some really clear examples here. You've got a plan like Jeevan Labh, which is great for someone who wants to finish paying their premiums early. Then there's Bima Jyoti, which is all about the security of guaranteed growth. And Jeevan Laksha is built for a very specific job, to create a replacement income for your family. You see? Each one is engineered like a different tool for a different financial job. Okay, let's switch gears. Category 2 is for market-linked plans, or ULIPs. Now, if you're someone who is comfortable with a bit more risk for the chance of getting higher returns, this is where you'll want to pay attention. These are a different kind of hybrid product. These plans are called ULIPs, which stands for Unit-Linked Insurance Plans. Here's how they work. A portion of your premium goes to buy your life cover, you know, the traditional protection part, but the rest of it gets invested directly into market funds, kind of like a mutual fund. So this gives you the potential for much higher growth, but it also means your policy's value is going to be tied to how the market is performing. A perfect example of this is the Index Plus plan. Its returns are directly tied to how major stock market indexes like the Nifty 50 or the Sensex perform. The bottom line here is you get your insurance coverage, plus you get direct exposure to the market's potential for growth. All right, on to our third and final category, whole life and combination plans. This is where we find some really unique structures. Things like coverage that can last for your entire life, or interesting mixes of benefits that really set them apart. And this category has some pretty cool designs. For instance, Jivan Omang is a whole life policy. It literally covers you up to age 100, and it can give you annual payouts along the way. Then you've got New Jivan Anand, which has this amazing feature where your life cover actually continues after the policy is paid out. And money-back plans? They're designed to give you cash at regular intervals during the policy term. Okay, so we have covered the why, the benefits, and the different whats. Now for section 4. And this is maybe the most important part. How do you actually put a plan into action? This is really the question at the heart of it all, isn't it? With all these different options, how do you find the one that truly fits your life, your family, and your goals? Well, the source lays out a pretty simple and logical 3-step process. First, you have to assess your own situation, your income, your family's needs, your long-term goals. Second, you compare the different plans out there. And third, and this is so important, you consult a qualified advisor who can help you navigate all the details and make a really informed choice. And the good news is, the paperwork isn't nearly as scary as you might think. It's mostly standard stuff. You fill out the application, show proof of residence and age, provide your KYC documents like an Aadhaar or PAN card. In some cases, a medical exam might be needed, but that's pretty much it. And it's so important to remember that a policy is not a set it and forget it kind of thing. It's a living financial tool that you can manage over time. If you miss payments, you could often revive a lapsed policy. You can update your nominee if your life circumstances change. You can access that loan facility we talked about. It's a tool you manage and use. I want to end on this really powerful line from the source material. It says, Jivan ki suraksha, Jivan ki sath, or Jivan ka vikas bhi. And that translates to security in life, with life, and also development in life. It just perfectly captures that dual purpose we've been exploring. It's about protecting what you have today while also helping you build for tomorrow. Which brings us right back to that very first question. Looking at everything we've covered, I'll just leave you with this to think about. Is your financial shield ready? Thanks for joining me on The Explainer.